Hello and welcome to Moneycontrol. JSW Steel reported a strong set of numbers on Friday. In the second quarter for the financial year 2023-24, the company reported a net profit of 2,700 odd crores, which is significant considering it had reported a loss in the same quarter a year ago. Net revenue was also higher than the year ago numbers. Now, if you look at the second quarter, the company benefited from the fact that coking coal prices were low and the sales volumes were significantly higher. But what went behind these numbers, and more importantly, what to look forward to? This is the main question. And to answer this and many more questions, we have with us today the Managing Director and CEO of JSW Steel, Mr. Jayant Acharya. Welcome to Moneycontrol, Mr. Acharya.
Thank you very much, Rachita. Happy to be here.
Mr. Acharya, very strong set of numbers, and we spoke to you after the first quarter numbers, and looks like a lot of what you had said has come true in terms of reducing your inventory in the second quarter. Help me understand, one thing that comes across from your numbers is that the India performance has been very strong, while US has been a little bit of a dampener. Tell me what happened in the second quarter.
So the second quarter numbers have been a very strong volume growth, and primarily driven by the Indian domestic demand. We saw total consolidated sales of 6.34 million, but the domestic demand in India was a big enabler. We saw a growth of 18% in the domestic sales in the quarter on a QOQ basis. Our absolute EBITDA numbers have gone up by about 12% on quarter-on-quarter to 7,886 crores, driven again by very strong domestic demand in infrastructure, manufacturing, renewable energy, consumption, and services. All in around a very good growth. I think we see that in spite of challenge in the global economic environment, India has continued to outperform. We see that during the medium term, India will continue to do well. During this nation building phase, India will require a lot of steel, and the steel demand will therefore structurally reflect a good GDP growth. And I think we see an 8 to 10% growth in steel demand in India in the medium term.
Mr. Acharya, help me understand, in the second quarter, the one interesting thing that happened and which has actually benefited your bottom line is the fact that the fuel cost remained slightly softer than their peaks earlier this year. How is it expected to be going ahead? And two parts of this question. One is on the price front, what is the outlook? And in terms of sourcing coking coal, what is going to be your strategy? Because it seems like most of the industry is now trying to look at diverse sources. If you can give us some light on that.
I think the coking coal prices, you're right, have gone up substantially in the last 1.5 to 2 months. And that cost of the coking coal partly will flow into quarter 3 and quarter 4. However, we do not think that this is sustainable, and it will moderate. And some moderation we have seen in the last few days. Also, the benefit of the price increases which had taken place in August, September, and part October will flow into October, December, and would offset some of the increase of the cost. So therefore, going forward, I feel that aided by improved volumes during quarter 3, JSW Steel will continue to do well. As far as sourcing of coal is concerned, I think we continue to look at various sources internationally. We are also developing the domestic mines which we have won in the last auction in India, and that would get in some more clean coking coal in the next 1.5 years or so. We will continue to look for strategic assets, either in terms of a stake or alliance, as long as the quality of coking coal meets the objective and as long as it is a commercial value makes sense.
Lots of points there which I would want you to kind of elaborate on. First up, help me understand, you referred to the price increase that was undertaken in the second quarter. How is, the price outlook for the rest of the year? Because the last time we spoke to you, you had said that there could be some moderation in the second half of the year. So give me an overall idea on what kind of outlook do you see, and Do you see some margin pressure coming in third and the fourth quarter of the fiscal?
So, from a demand perspective, I think it's important to see that the demand in H1 has been extremely strong. India demand was 14.8%, and that has basically been a main driver. The price, therefore, the prices in the country also went up. Inventories were restocked, and I think the momentum of the demand will continue in H2. Seasonally, this is a better half, and we should see better numbers. Our expansion in BPSL, which is now coming on stream in the second half, will benefit the volumes. Also, we had some shutdowns and maintenance shutdowns in our existing operations in Q2, which are all behind us. So we should see better capacity utilization in our existing operations as well. So volumes will be better going into Q3 and Q4.
Q3, right. So the volumes you are saying might just offset the impact of other factors which might be weighing on the margins as such.
I would say that on an absolute number basis, we will certainly be better in terms of volume and therefore absolute EBITDA. The domestic momentum continues. It's very difficult to forecast a price or the coking coal cost. Therefore, I would, that's why I give you the input that while coking coal prices have gone up, it would reflect in the cost, but it's offset to some extent by the price increase which has taken place in August, September, and part of October.
Fair enough. You spoke about securing supplies for coking coal and looking at assets. What's happening on that front? Is there anything that you are looking to close soon enough?
We are engaging with various asset holders. We are continuing to look at good quality coking coal which can be blended at our works. But that I think we continue to scan the environment. We haven't yet found anything which is fitting well and near closure. If there is anything which comes up closer to time, we'll look at it and announce.
Mr. Acharya, on this front, can you give us some perspective on what's happening with your arrangement with Tech Resources, especially given in this environment where India-Canada relationship seems to be not getting better anytime soon? So how are you looking at the plan itself to begin with?
I don't think our focus has changed. I think the India-Canada situation over time will improve. From a business standpoint, I think we are engaging in discussions, and as I had said earlier, we will continue to engage, and if there is value and merit in the asset, we will look at it.
Is there a timeline you're looking at in terms of by when would you like to conclude this?
Difficult to say because the conclusion is on both sides. So I think it's something which over time we will get to know.
But in this environment, I mean, the geopolitical situation in general has become more predictable than ever. A broader question, I mean, how are the steel prices likely to be? And these disruptions, I mean, whether what's happening in Israel or, I mean, in general, the geopolitical situation becoming tense, are steel makers a little jittery of what's happening globally on this front?
So from if you look at the raw material prices today, the way probably the prices have moved in the last few months, it should reflect in the steel prices. So we would probably see some improvement in the international steel prices going into the next 2 quarters. We also expect that the coking coal prices will moderate because this kind of price increase of more than $100 in the last 1.5 months is high, and I think some moderation has taken place in the last few days. Having said that, it's difficult to forecast a price, but I would say that the demand in the country in the second half, as I mentioned, will continue to be seasonally strong, and that would support a pricing environment which is stable.
What about the value-added products and specialized steel, which is a focus area for you? I mean, these are all high-margin products that JSW has been focusing on. How is the price and demand outlook on that?
So I think that's a good point, and our value-added sales and special products have gone up. And this quarter, we have done 62% of value-added and special products. It has grown by 15% to 3.8 million plus. We continue to focus and develop clients in this category. Various development with various clients are going on, and R&D activities are going on. So we will continue to focus on this area, and that is yielding good results. So as we expand our capacities, it's we are making sure that our content in terms of the product mix is something which is more value added, which is required in the country and which is required in the world, whether it's automotive or energy transition or lower carbon emission steels. We continue to focus on those.
Mr. Acharya, give me a little bit of sense on where's the demand coming from. I know auto sector demand has been rather strong of late, but just give me a sense on what are the sectors driving the demand in India, and going ahead, what are you betting on?
The demand, I think, infrastructure is a very big demand driver. Especially the government push on infrastructure has been very productive. Manufacturing has done well. If you see general engineering, which is also a pull from the infrastructure sector, has done well. Energy transition in the renewable has done very well. We are seeing the railways, in terms of rolling stocks, in terms of railway stations, in terms of the railway network, improve. That is playing out into the demand. Warehousing, data centers playing into the demand. So very broad-based, demand across sectors is what we are seeing. And going forward, I think we see that infrastructure, manufacturing, and consumption will be very strong demand drivers.
Mr. Acharya, in terms of the government focus on infrastructure, of course, it's been a big driver, and we are seeing across sectors orders kind of flowing in, whether it's steel, cement, infrastructure. But there is also this one lingering concern that with the country moving into election mode, with the union elections coming in, there might be a little bit of slowdown in terms of the ordering process. Are you anticipating any kind of slowdown there, or do you think there is enough in the pipeline that will keep demand going for you?
So I think I would look at it this way, that in the medium term, an election year will not matter very much. The government of India, I think, is very focused on the development of the nation. So therefore, infrastructure building is a very key factor of that development. And I think the overall infrastructure pipeline, which we have seen, front loading, which we have seen in the first half, the new projects which are ongoing, I think will continue to hold strong in the remaining few months as well. And I would look at it in the medium term and not really on the year in which there is an election. So on a medium term basis to the decade, I think very strong growth is what we see.
You spoke about the opportunities in the international market. Help me understand. One is the coking coal opportunities that you spoke about, but overall in M&A, you have earlier also said that brownfield expansion is a strong opportunity. What's happening on that, and is there anything in the pipeline? There are lots of reports about you looking at mining and other assets of Vedanta. Please share some perspective on that as well.
So I think while we'll continue to have various options while we grow, our focus will remain to grow our brownfield capacities. And as we had indicated earlier, our brownfield capacity expansion in Vijayanagar is on track. By March 24, our Vijayanagar 5 million ton expansion should get completed. The BPSL expansion is also on track. That should add 1.5 million ton by again March 24. We expect some debottlenecking at Vijayanagar again to play out in 2025. That would add capacities and take it to overall number of 37 million tons in India and 38.5 million tons globally. And that would make JSW Steel, I think, one of the largest players globally as well. Going forward, we have opportunities of brownfield expansion in the existing locations. And our focus would be to do that first, because we have no specific investment cost in these areas. We will look at assets if they make strategic and economic sense. including any which may come up during this period of time.
Mr. Acharya, how do we stand on the Capex front? I mean, you have a number of 20,000 crores that you had announced earlier. Are we on track? Are we looking at revising the target? What's the status on that?
So we have spent about close to 8,000 crores in the first half of this year, and we continue to be focusing on this capex because all our projects which are critical in nature will continue to be monitored so that they deliver on time. So we will be in the range of this 20,000 crores which we had earmarked for this year. Going forward, we will allocate capex prudently, financially prudent way in a way that I think it is value accretive for the shareholders. The efficiency of our executions has always been strong, and that will deliver better shareholder value as we go forward.
Is there any visibility on the tie-up that you have with JFE? Has the plan moved ahead? What's the status of that, and by when do we expect some substantial announcement on that?
Yeah, so that project right now is in various stages of looking at equipments, and very much on track. And we expect to complete that project in 2.5 to 3 years' time, along with JFE. It's, as you know, the CRGO is a very closely guarded technology. Our partner, we have that technology, and we are associating to make the joint venture in India, since India has a very good demand. As we go into more and more renewable energy and more of electrical based energy consumption, we will see CRGO demand increasing. So therefore, this capacity is an initial beginning, and we expect to increase the capacity of CRGO as we go into the remaining few years.
Mr. Acharya, help me understand, with the Capex and all your other plans, where do we stand with the debt levels right now? And for the rest of the year, do we see the debt, any refinancing happening, or are you expecting to close this financial year at a slightly lower debt levels than where we are right now?
So we have closed the quarter with a debt of 69,000 crores, a little more than 69,000 crores. I think, but what is more important to note is that this is primarily on the merger of JISPL, which we had indicated last time. However, our ratios of net debt to EBITDA have improved. We are at 2.52 by the close of this quarter, as against 3.14 in the last quarter. We expect, while we allocate capital for growth, we will continue to be near this net debt to EBITDA ratio of 2.5 onward. It will be range bound in this year closing as well. So our capex is mainly driven, you asked about refinancing, it's again driven mainly by internal accruals. We will continue to refinance some of our debts and balance it out, but primarily again through the internal revenue generation.
Mr. Acharya, we are almost at the close of the calendar year and midway through for the fiscal year. Tell me now, in terms of planning for the next year and looking at this year, I mean the closure of this year, what would be the biggest challenge that you foresee for the steel industry, and JSW Steel, like, how do you look at dealing with that?
So I think JSW Steel, I think we are well placed. We are lucky to be in a country where the economic momentum is quite strong. Going forward, we into this decade, we see the economic momentum continuing, and thus it will be, the steel demand will also be very strong. I think structurally, we see that the GDP to steel elasticity will be very high. During the nation building phase in Japan and China, we have seen an elasticity of 1.5. And if you look at the last 2 years, we have seen a very strong elasticity of steel demand to GDP of 1.8 and or so in the last year. We feel that during this decade, the steel demand will be good. Even if we take an 8 to 10% growth, we will continue to add 10 to 12 million tons of demand every year incrementally. And by the end of this decade, that would add about close to 100 million tons of steel demand. So we would need to increase capacities in India, and that's exactly what we are focusing on. And I think our main benefit, or rather our main strength, is also an area where we need to be concerned about, because the global situation, as we discussed, is a little challenging. We should be watchful of any trade flows which are getting diverted to India because of a good demand in India and weaker demand elsewhere. We are vulnerable to some imports, so we will continue to watch and track that.
And with the carbon taxes coming in, I mean, is that giving you sleepless nights?
I think we are. I think we are quite, preparing ourselves quite well at JSW Steel, and even the government of India is preparing, the blueprint quite well. There are 13 task forces which have been formed by the government of India on various parameters of improvement. Our energy transition into renewable is getting driven by RPO obligations, which is already predefined, and that RPO obligation is increasing every year. Energy efficiencies are improving. We already have the scheme of performance, achieve, and trade in place. The new mechanism, the new market mechanism of carbon taxes certificates will fall into place, I think, by the next year. We see the hydrogen mission having been announced, and 50 million tons of hydrogen, which needs to be generated by 2030, is another focus area. And the carbon capture and use will be another area which we will continue to look at in India. Overall, I think a lot of initiatives are being taken by the government. We are taking equally good initiatives on our side to look at various levers, which I discussed right now. Renewable energy is one of them. Efficiencies on energy, process, and raw material. Circularity in terms of using more of scrap and gases and any generation of waste within the system. And we will continue to look at disruptive technologies, including hydrogen. And as they mature and evolve and become commercially more viable, we'll integrate that into our operation. We are already doing a trial hydrogen electrolyzer-based plant at Vijayanagar, and that will give us some more data points as we go forward. So I think we are getting quite well prepared, but every country has a different pathway. So we need to collaborate more to define and measure carbon. I think the measurement metrics, the methodology adopted will need to be defined by the world as a whole, as one. And we need to define the scope and boundaries better as we go into this regime of carbon taxes and carbon border management.
Mr. Acharya, thank you so much for your time and perspective, and wish you the best for all your big plans, and hope to talk to you soon again for perspective. Thank you so much for joining us.
Thank you very much. Thank you very much. Pleasure.